Hi, welcome to the Market Alert for Friday the 13th of November 2015. And yesterday's market, in the pre-session, the volatility picked up and we saw the market dropping over 150 points before Yellen actually spoke at 2:30, which is around this time. So the volatility is starting to really return to the market. And you know this when you're getting it in the pre-market session. So a good range there yesterday, 150 points of pre-market activity, and then Yellen speaks. We can see the markets sideways, and apparently they've got. I thought I'd tune in on the old business channel there and have a look. And they have some sort of Federal Reserve conference thing going on at the moment, which I've never heard of or seen before. So Yellen's speech was only just to introduce it. Then they wheeled out everybody else to talk about it yesterday, which is why you see the market moving lower. It would be better if they stayed at home if they want the stock market to go up, because it appears that everything that they said started to have a negative impact on the market and it continued to move lower. So that being the case, I do believe that it's also continuing for today as well, although there's nothing actually stated in the news there. Let's just have a quick look. I can't see anything about Yellen speaking at 3 p.m. or 2:30 p.m. But I will certainly have a route round and let you know in an email if she is in the Times and when to stay out of the market. But apparently she's going to finish off this conference with a speech. But it doesn't appear to be on the Forex Factory News wire there. So today, just 3 p.m, we've got the UM consumer sentiment, and pre-market PPI is month on month. That's also to be released as well. So that's the news. Yesterday's trades, we've already got 150 points in the background. We've got this support here. We had a sell signal. The market just found support where the market has stopped. Just as the market opened, reversed, moved higher, 40-point loss, and then the loss is made up, or half of the loss is made up as the market comes back through the 17,600 level there, which is the 20-point scalp of this bar here. You can see there. So again, alerting you to the fact that this market's got some weakness coming back into it, coming back through the 17,600 there. So the market drove through, but couldn't hold as it went through this bar here. This signal, of course, is void because we're already long here. As the market's closed above this line, we're hoping it's going to continue, but it doesn't. It comes back. And when it comes back to the scalp level, especially through a major psychological level, it's time to exit stage left, as they say in the theatre world. And then we had a sell signal. And again, same picture here as the market came back. It broke through, which was nice. It did give us over 30 odd points at one point, but then started to come back again as well as the market went into the quiet period for the first part. Again, profit on the trade, but then eventually giving more profits as the market went down to 17,500 there. So the market bounced back once more. Back to this resistance level. We've got resistance over here, so this is a really good signal. We've got the resistance there where the markets move lower, and you can see how it's banged its head against this 17,550 level. The market goes short for another 20 points down to the 17,500 level, and then eventually we get another signal at 10 to 8 that goes on to also make another profit before the close of trade there as well. So we're recouping what we'd lost on the first signal of the day in the first part of the session, and then profits coming in the second part as the Federal Reserve sub-members spoke at the conference, moving the market lower. So obviously they're still talking about raising rates. It's as simple as that. If the market's going down at the moment, it's because they're talking of raising rates. So the market took out the 17,542 level, and now we're sort of sideways on the overnight. The next downside target is 17,125, but we've got a long way to go before we get back down to the August flash crash, which is down at this level. I'll just draw this one in for you. We'll keep that in. 15,254. There's a fair old way to go before we get down to this level, but who knows? If they continue to talk about the market or increasing interest rates, the market's certainly going to feel that downside pressure. And who knows, we might see a crash during November for the market to then be just devalued sufficiently for Yellen to say that she doesn't want to increase interest rates now, because the asset values and the uncertainty because the market's crashed and traded back to the August lows is more of a concern than the strong labour market that she keeps going on about. So you never know what they're going to do, and you don't know how much of it's actually engineered as well. And then finally today we've got implied volatility kicking up nicely, 15.17, 15.17 there, and also the blue line well and truly below the implied now. You can see when these two generally cross, we then get the reaction in the market we're actually looking for. So this is set up nicely as well for a move to the downside should one be forthcoming. Right, that's it from me for today. I will see you in tomorrow's, well, not tomorrow's, but Monday's edition of the Market Alert. Have a great weekend, and as ever, thanks for watching, and I shall see you in the next one.